All right, now we're going to be talking about dead cat bounce. So there's an old saying in investing that says even a dead cat will bounce if it's dropped from high enough. So what this means is that it refers to a short-term recovery in a declining trend. Okay, but it's a little bit tricky to trade this actual pattern because it's very hard to know when the bottom is going to be set or the tops. So a way that you can do it is that you can measure with the fib tool the top of the move, and then when you see the bottom, right when the price starts to go higher, if we don't go past the 0.618, we utilize this as a resistance point, we can be a little more confident that the price is going to stop there. It's going to continue to decline after that. So it could be a dead cat bounce. And also another thing you want to look at is you want to correlate the volume, okay, the volume pattern with the rally, the little bounce that it had. So you can see right here, the price is actually trending up on this bounce, okay. But if you look at the volume is actually trending down, okay, right on that bounce. What does that tell you? That if price keeps going up, but volume keeps declining, that's bearish, okay? So if you see price actually going up and volume picking up, then that's a bullish sign. But since it was the contrary, we can utilize this to get short setups here, okay? Since it's most likely going to be just a dead cat bounce because of that. If you look at here, we have another example. It's just a little hard to know this, to find this dead cat bounces, because you never know when they're just going to continue up or it's actually a dead cat bounce, right? So for example here, the price went down sharply and then we had a nice recovery. Now we want to measure from both this top and the bottom right here. You see our 0.618 right there. We can utilize that as a reference and see how we just utilize that as a resistance level. Wasn't able to go and break it, just like that here, okay. And we can utilize this to place short setups, and we can go and aim for at least a double bottom formation here, which is what happened, okay. So that's what we're going to aim for, because you don't know if it's going to actually double bottom and continue with the trend up, or is it going to be just another wave, because see, sometimes it actually comes over the 0.61. So that's why you want to be careful with this pattern, because it can actually keep going up to here and do a double top as well, up to the beginning of the top of the move that we measured. So that will be your stop loss. But another way you can measure this is just like the yellow weight formations. So we measure that top and that bottom, and we got this 0.61, and we're going to utilize this as a reference. So we see the top there, and we're going to use that measure of the first leg and use that as our next take profit level, okay, which actually works pretty well. So we're going to take a look at it, and you just want to be careful with this because it could go either way, okay. So you want to keep that in mind and don't trade this with big positions, because you never know what's gonna happen. If it's gonna double top, it's gonna double bottom, it's actually gonna keep running, okay. But that 0.61, it's gonna be a very good measurement that you can utilize to trade this relief rallies that happens, but they actually continue the downturn after.